In the constantly changing world of fundability, the big question is this: how are entrepreneurs and real estate investors like us, ones who want to grow our businesses and who are tired of paying for really expensive alternative lending, how do we tap into the most inexpensive money available and do it without the hassle of typical borrowing? That is the question, and this podcast will give you the answers. Welcome to the Get Fundable podcast with your host, Merrill Chandler.
Welcome back, everybody. Merrill Chandler here, your host of the Get Fundable podcast. Now, I just did a Facebook Live with my partner and CFO, Jessica Tabora, about more offerings from the SBA in their EIDL, the Economic Disaster Relief Program. And so we want to as always, I start at the 10,000 foot level and talk about not just the loan solutions, but how to show up in a way that lenders are going to look at you. And the main thing that I share, and you need to watch this FBL, the main thing that I share is that everything we're doing right now is compacted. So the better you perform, right? The borrower behaviors you do right now are going to be far more meaningful in the future and your future funding approvals, right? Your fundability can go through the roof or it can decline based on how you show up right now. So when we come back, we're going to drop right into the FBL with Jessica Tabora and take a listen, because the things we talk about there are timeless. We went through 2008. I went through the dot-com bust of early 90s. 2008. This will happen again. So listen to the strategies and the learnings that are going to help you be fundable, whether the economy is up or the economy is down. Enjoy, and I'll see you in our next episode. Welcome. I want to welcome you to this episode of the Get Fundable Crisis Fundability Update. So I have the unique and special pleasure of having my subject matter expert join us today so that you get all of the I's dotted and T's crossed when it comes to what's going on out there, especially the loans and things that are being offered from lenders and from the government, from the SBA, et cetera. Now, big picture, guys. First of all, the 5 truths that we know and we're operating from at Get Fundable is that lenders are tightening up lending protocols. They always have when there's a small contraction, but they're not lending. They're lending to the people who have proven over the last, as we've talked in the past, over the last 24-month look-back period, the people who they've been dependent, that they have been able to depend upon in treating their money with deference, respect, and who have used this time of expansion and kept their borrowing behaviors in alignment with their funding guidelines. They're still lending to those people. So fact number 2 is that they're just changing who they're giving more money to, and it's based on history we've talked about in the past. Number 3, our clients, our students, the people who are implementing the coaching and borrower behavior, the boot camp trainings and things that we have given them, the people who've read my book, they are still getting approvals and automatic limit increases. Every single day when my team meets, we're getting feedback from clients who are still getting increases in credit lines. So they're choosing to give more money to the people who are behaving with the borrower behaviors with the highest chance of success and the lowest possible risk. And those are things we keep talking about, right? Now, guys, human beings, we are wildly resilient. So every Facebook Live we do, every podcast that I do, every message we're sending out there is that we're not throwing in the towel, and neither should you. Don't lose hope. There is so much that we can do to improve your chances right now so that you can survive, thrive, and prosper. All right? So Every adversity, Napoleon Hill said, every adversity carries with it the seed of equal or greater opportunity. Remember that slingshot effect I keep referring to. I'm going to refer to it every single time. So we are here to see how we can pull back and draw this dynamic tension that the markets and COVID-19, everything out there is compressing. And there's a thing that I want to share with you that does anybody know what the Bernoulli effect is? The Bernoulli effect is about fluid dynamics. And paraphrasing, it says that the tighter the aperture, the greater the force of the liquid, okay? This simply means, just like you put your finger on a hose and you're able to spray 20, 30 feet from the same amount of water coming out of that hose. That's the Bernoulli effect. The same thing happens here, guys. The tighter the pressure, the more force of creativity, the more force of power, the more force there is to break through some of our limiting beliefs, some of our older or more antiquated behaviors and activities. Now is the time to really pop the top off of this and make this a opportunity to continue to grow. So, you guys, this is why I brought Jessica Tabora. She's my partner, my business manager, plays the role of CFO as well in our organization. And in her due diligence, we agreed as an executive team that she be here to give you the nuts and bolts of, and we're even going to update on the PPP, right? The
Plan
program. Yes, the Paycheck Protection Plan that we did earlier, and going to bring us some more information on the EIDL, and that EIDL is all about the
economic injury disaster loan.
Thank you. So, welcome everybody. I'd like you to welcome Jessica Tabora. Jessica, talk to us about what the differences are in between these, in between the types of loans that are being offered. Can we do one or the other or both? Fill us in on what's happening out there and your experience as doing research for us that we can pass along to them.
Yeah, absolutely. So first of all, I think one of the application requirements should be if you can say economic injury disaster loan 5 times fast, you automatically get it.
You're on the fast track to approval.
Yeah. Seriously. So with the CARES Act, there are 3 different offerings. It's the Paycheck Protection Program, the Economic Injury Disaster Loan, and then Express Bridge Loans. So the Express Bridge Loans are only available to if you already have a business relationship with the SBA. So if you already have a loan, and it goes up to $25,000, and it's just a quicker turnaround time because the SBA already has your information. So the 2 that we are focusing on are the Paycheck Protection Program, which Merrill spoke about a few days ago on the Facebook Live, and then the Economic Injury Disaster Loan. So with the EIDL loan, that one, you send in your application and you are eligible for a $10,000 advance, which will get to you a lot quicker. And then while that is sent out to you, the SBA is still reviewing your application and reviewing the business documents that you've sent in, and they decide how much you get for your business. They take into account how much it's going to take your business to operate for 6 months, and then get that to you. But you've got that $10,000 advanced and right up front.
So I understand that's like, thank you for applying. Here's your gift of $10,000. And then you may not have to bring it, whether you are approved for the larger amount, you get to keep this tax-free and for a loan that's forgiven, correct?
Well, great question, Merrill. So the $10,000, it depends on what you use it for. So if you take that initial $10,000 and use it for pretty much what the Paycheck Protection Program is used for.
Got it.
Tax, utilities, rent. If you use it for that, you have the ability to then refinance that part and have it forgiven.
Okay, so you're saying I can't take my long-awaited trip to Australia with that 10,000 and wait the COVID out. Got it. Okay.
So,
okay,
yeah. So that is the EIDL loan in a nut. Pretty much, you can apply for both. SBA says small businesses are eligible to apply and be approved for both. If the Paycheck Protection Plan and the EIDL. One thing to keep in mind when it comes, so here's a great breakdown of the two. One thing I want to point out, near the bottom where it says collateral, these EIDLs are subject to getting a UCC lien put on there. However, the Paycheck Protection Program is not.
All right, so let's take a look at that. So, some people don't know what the UCC lien is, and so UCC means Uniform Commercial Code, and a bank or a lender, even private lenders, have the right to file paperwork with your state. That's the Uniform Commercial Code at each state, and at the state level, that you're basically declaring a lien against assets in that organization. So for our funding hackers, for our clients, those types of loans may limit other types of loans that you can get from your lenders in the regular day-to-day of acquiring business lines of credit, business loans, etc. Because in those loans, we always seek for loans that are not going to file a UCC, because it caps out 25 grand or whatever up to $2 million. It's saying, we get all those if you don't pay it off. So that there is a kind of a thing you got to be aware of if you're going to do the EIDL loan. A UCC, the PPP, the Paycheck Protection Plan does not file those UCCs, and that's a big deal. Thank you, Jessica, for bringing that up.
So we've got this graph that came from the SBA website up here, and while this is up, while I was doing my research, so we bank at several different banks, but we have a great relationship with Wells Fargo. So I started at their website to find as much information from a lender's point of view as I could from here. And in my research, Wells Fargo actually cannot, after 2 days, they had to shut down their application program because they've reached their asset cap.
Yes.
So right now,
yeah, so let's talk about what an asset cap is. That an asset cap says that you can only loan so much cash out into the world as a percentage of the assets that you own as a company, all the buildings, all the branches, you can't go, and it depends on the bank and it depends on the time, because I believe they're going to raise that asset cap. They have in the past, right? They're going to raise that asset cap so that people can keep lending. But technically by federal law, you cannot lend more than a multiple of what you own in assets. So they shut down, 2 days?
Yeah, 2 days. And what's actually, before we got on, I was actually reading more about that. And it's specifically Wells Fargo because of a few years ago, they were making all the fake accounts. So they have a significantly lower cap than they got
the rug pulled out from me underneath them. Now, remember, they're the ones who get, let me bracket this. Remember, even though it's the SBA that is backstopping these loans, the Paycheck Protection Program is actually being provided by these banks, the commercial banks. And so they have to follow all the lending rules. And of course, Wells Fargo has a lower lending cap, but they also they're forced to go through they make the interest on it, and they get to the fees or whatever other contingencies that are based on that. So everybody's down to lend and we talked about this yesterday, they're down to lend if they can still put everybody through the fraudulent applications, software, et cetera, et cetera. So there is a lot going on behind the curtain here, behind the scenes, from what's being announced by the government. Weigh in on that, Jess.
Yeah, exactly. So in fact, Wells Fargo right now is pushing really hard to get that cap temporarily raised so that they can keep helping with the coronavirus effects. And that's actually a second point is this is not going to be quick. You're going to fill out this application and you're not going to get the money within a few days. In fact,
The application might not even processed at latest guess for a couple of weeks, even processed, right?
exactly. So that's when it comes down to, is there a pro and con about both of them? I don't know. One thing that comes with the EIDL is that they do give you that advance up front, and then it can take a little while on the back end. Paycheck protection, there's more room for forgiveness there, but it definitely takes longer. And that's another thing to think. If you are considering applying for one of these loans, does your business need this loan, or do you just want it? And would it be nice? And so make sure you're taking that into consideration, not only because there are so many other people who definitely need it, but lenders are going to see that if you're just getting money and getting a loan because it's available, but don't necessarily need that. How does that look?
Yeah, that wise counsel. One of the other things that we want to kind of add to this is that, again, our team is just like we serve our clients and provide solutions coaching. We're giving you as much solution coaching, even on FBL, right? We're trying to over deliver. We're committed for you guys to know at least enough to protect and survive, thrive, and ultimately prosper. So one of the other things that I wanted an update is that the new notices are going out, at least from Fed Loan Servicing, which is kind of the one of the servicing organizations for federal loans. Just like Fannie Mae and Freddie Mac buy the loans from and service them for mortgages. Well, I believe it's Sallie Mae and Fed Loan Servicing. There are groups out there who service the student loans, and they have a 0% interest rate since March 13th, a month and change ago, through September 30th of this year, 2020. So no interest rates whatsoever. They're also giving and I want to quote this. Let me make sure I'm saying it correctly. This is from their actual official documentation. We place the loans identified in an administrative forbearance for the period March 13th through September 30th. During this period, you will not be required to make monthly payments on your loans. If your payments are made through auto debit, those debits will not occur while the forbearance is in place. Now, this is important to know because every single one of the banks said you have to manually stop your auto pays or they're going to keep paying. The Fed through now I can't speak for Sallie Mae, but it's another version of the Fed Loan Servicing. They're another entity that is in charge of that. They're saying through auto debit, these debits will not occur while the forbearance is in place, and they have to identify yours. Now, one of our team members got this as a result of her student loans, and so you need to make sure your loan is available if you get one of these letters or emails. If you have not received one of these, then you need to call your servicer and find out your status. You can't just stop making payments unless you receive notification that you qualify. So very important, guys. We have to be conscientious. We have to be deliberate. I keep using that word, but we have to be deliberate in the moves that we make so that we can create the best and most prosperous time now and have our lenders absolutely love us when we move back into 6, 12, 24 months of we're back in prosperity and things are growing. I say it again, lenders are going to look at us, how we treat their money today and how we treat our relationship with them today is how they're going to lend to us tomorrow. Okay, so that vital that we do that we do this. Jessica?
I was going to say it all comes down to relationships, even in a time right now where we can just assume or expect that a payment is going to be in forbearance, that's so not okay. Like, you need to treat the lender with their respect and talk to them and have a conversation with them, and not just
communication. And remember, they're taking notes. Every time you talk to a rep, they're taking notes. Those notes have keywords like a hashtag would be, or a tag, right? They're taking notes, and those tags are going to be filtered through their underwriting software about how to evaluate you as you go through this. So it's just like I said, the Bernoulli effect. Everything is compacted here. Everything we're doing right now, guys, is more meaningful than 2 or 3 months ago. Every activity we do, for good or for ill, is more meaningful because of the circumstances. So we can go 100 miles instead of 5 miles in this period, in advancing our fundability and our opportunity for additional funding approvals as time goes on.
Yeah, no. One last thing that I want to add is, I know hold times for banks are ridiculously long. I'm going to knock on wood, and this might not always be the case, but I called the SBA last night and the hold time was maybe 5-10 minutes. So if you do have questions, maybe about your specific situation or for more detail on these, as of last night, the hold times on the SBA weren't too bad.
All right, thank you. Also, I want to put out there, now this is even though the website is a public website, and I don't want to, and hopefully not 10 million people are going to have this shared, but instead of calling the number on the back of your card, if you will just Google and say executive numbers for Chase, executive numbers for there are opportunities in our regular coaching and modeling for fundability where we call these numbers, and we're able to fast track an app or overturn a denial or a low value approval, right? That we can get 15 instead of 10 because you're calling the equivalent of a manual underwriting department. So I'm just giving that to you guys. The executive numbers are a thing. Just Google your bank and like executive number, but don't believe the guys who are fishing for you. Oh yeah, pay us $10 and we'll give you this list. That's not, we've never bought a list ever. So look for executive numbers, Google search in for your bank, and see what you can come up with. There you go. Anything else, Jessica? What a great update. Yeah. What a great update. So in conclusion, guys, stay tuned to make sure you so you get notifications on Get Fundable, Funding Hackers. If you're a member, CreditSense Insider Secrets. Stay tuned because we're coming up nearly daily. I think we've been killing it for the last couple of weeks, just making sure that every new thing that we have researched with our due diligence, we're doing it for you. We want to make sure that you succeed in this time that is constricted and compacted. We have more positive effect if we do the right things now than ever when times were good. So let's take advantage of this, slingshot that our fundability forward. You guys, anything else, Jessica?
No, thanks for having me.
Absolutely. Thank you for all the crazy, awesome deep dives that you do to take care of our team, to take care of our clients, and to take care of our community. So thanks, guys. You have a spectacular rest of your day, and we will see you soon on our fundability updates. Thanks, guys. Bye now.
Thank you for listening to the Get Fundable podcast. Please leave comments because Merrill would love to read about your aha moments from this episode. And be sure to visit getfundable.com to read our blog, get important links, join our community, and much, much more, like ordering Merrill's tell-all book that is changing the world, The New F Word. And you got to tell your friends about this podcast because we want them to get fundable too.